take a slow breath. Because what's happening right now in the global silver market is not just another move, not just another headline, and definitely not something the mainstream understands yet. Silver didn't simply rise, it broke into a new reality, a reality that signals the beginning of a financial shift so powerful, so unexpected, and so underreported that most investors won't recognize it until it's already too late. The world is changing, silently, beneath our feet. And silver is the first asset revealing what's coming next. But today in this video, we're going to break this moment wide open. We're going to explore why silver just made history, why global demand is surging at the exact moment supply is tightening, and why a little-known presidential executive order is quietly preparing to funnel trillions of dollars toward commodities like silver and gold, potentially triggering a financial chain reaction unlike anything we've seen in decades. By the end of this video, you'll see exactly why silver is waking up now, why the world is shifting back toward real, tangible value, and why the next phase of this transformation could reshape the global financial system from the ground up. Before we dive deeper, a quick note. This presentation is a macroeconomic narrative, not investment advice. Every viewer should make decisions based on their own research, risk tolerance, and professional guidance. Now, let's go deeper into the truth behind this moment. Because once you understand what's unfolding, you'll never look at silver, or the world's monetary future, the same way again. For years, silver was treated like an afterthought. Investors chased tech stocks, meme rallies, cryptomanias, AI narratives, anything that promised fast gains and instant excitement. Silver sat in the background, quietly moving, quietly being mined, quietly being consumed by industry. It didn't demand attention, it didn't trend on social media, and it certainly didn't fit the image of a modern asset. But that's exactly what makes this moment so powerful. Because while almost everyone was looking somewhere else, the foundations of the silver market were being reshaped by forces far bigger than speculation: energy transition, data expansion, geopolitical stress, and monetary exhaustion. Silver is not just shining because sentiment changed. It's shining because the world around it has changed. Think about how dependent our world has become on electricity, data, and constant connectivity. Every server farm, every AI data center, every 5G tower, every electric vehicle, every solar panel, they all rely on components that, somewhere in the chain, depend on silver. It is one of the most efficient conductors on the planet. It reflects light better than almost any other metal. It survives harsh industrial environments. And unlike gold, which mostly sits in vaults and jewelry boxes, silver gets consumed. It gets solared, fused, layered, embedded. A huge portion of the silver used every year never comes back. It doesn't sit in neat bars waiting to be resold. It disappears into countless tiny applications that are too small or too expensive to recycle. That means the world is constantly drawing down a finite resource, while demand keeps rising. Now, place that reality next to this fact. For several years in a row, the global silver market has been in a structural deficit. In simple terms, the world has been using more silver than it has been producing. Mining output and recycling combined have not been enough to match industrial demand plus investment demand. And yet, during this entire period of deficit, silver remained underpriced relative to the pressure building underneath it. The deficit wasn't a one-off event. It became a pattern, a new normal. Each year, the gap between what we use and what we produce quietly eats into above-ground inventories. Each year, the cushion gets thinner. Each year, the margin for error gets smaller. Eventually, reality has to catch up. That's the point we're approaching now. And in the middle of that already tight situation, a new force steps onto the stage. Not from a mine, not from a refinery, but from a desk in Washington, D.C. A presidential executive order is signed, instructing regulators to rethink what Americans are allowed to own in their retirement plans. For decades, 401ks were funneled into a narrow corridor: stocks, bonds, and conventional funds. Alternatives were limited, tightly controlled, or simply blocked. Most people never even realized there were other options beyond what their employer provided. But this order changes the conversation. It tells the Department of Labor to consider alternative assets as part of what retirement savers can access. And that list specifically includes commodities like gold and silver. This doesn't mean that overnight every retirement plan starts buying silver. It doesn't mean everyone suddenly owns precious metals in their 401k. What it does mean is that the door opens. Fiduciaries, the people responsible for managing these plans, now have a framework to justify exposure to assets that protect against inflation, currency devaluation, and systemic risk. Even if only a small percentage of retirement funds are allocated to silver-related investments, the effect on such a relatively small market could be enormous. We're talking about potentially trillions of dollars that, for the first time, have a clear legal path to flow into commodities. In a market already running deficits, that's like rerouting a river into a lake that's already near the brim. Now zoom out and look at the wider world. Inflation may be officially cooling on certain measures, but everyday life tells a different story. Food is more expensive, housing is more expensive, healthcare, education, services, nothing feels cheaper. Wages don't stretch as far, savings don't feel safe. People are using credit cards to survive, not just to shop. Governments can spin narratives and redefine metrics, but they can't hide the experience of ordinary people. That gap between official statistics and lived reality is a warning signal. It's a sign that the monetary system is under strain. Central banks know this. They know that the system relies on constant confidence. And when confidence is threatened, their response is almost always the same. Lower rates, add liquidity, expand the balance sheet, restart stimulus. It may be presented as supporting the economy or stabilizing markets, but the underlying mechanism is simple. More currency units chasing the same amount of real goods. Over time, that erodes purchasing power. Over time, it punishes savers and rewards debt. Over time, it makes real, tangible assets more valuable, not because they changed, but because the measuring stick, the currency, lost strength. This is where silver becomes a mirror for the system itself. When faith in paper promises begins to weaken, people look for something that does not depend on trust in a political institution, something that cannot be printed, something that cannot default. Gold has always played that role for central banks. Silver plays that role for ordinary people and for industries that simply cannot function without it. It sits at the intersection of money and technology, of tradition and innovation, of crisis and opportunity. When there is too much paper and not enough reality, silver reacts. At the same time, geopolitics is rewriting the map. Trade routes are shifting, alliances are being tested, sanctions are being used as weapons, energy is being leveraged as a tool of influence. Behind the scenes, countries are quietly accumulating metals, energy reserves, and strategic commodities because they understand something simple. In a world of uncertainty, real assets are power. Nations that can feed their population, power their economy, and secure their infrastructure with their own resources have leverage. Nations that rely entirely on external supply, external credit, and external confidence are fragile. That's why you're seeing BRICS countries talk more openly about alternatives to the dollar system. That's why you're seeing more gold moving from west to east. That's why you're seeing long-term deals being signed for commodities, not just for currencies. And that's why silver, even if it doesn't get mentioned as often as gold, is becoming quietly central to future strategies. It's in the chips, in the panels, in the weapons systems, in the communications hardware, in the backbone of both economic growth and national defense. Now bring all of these threads together. A structurally undersupplied market, a critical industrial metal that the modern economy cannot function without, a growing appetite for hard assets in a world drowning in debt, a fresh legal pathway for massive pools of retirement capital to access commodities, a Federal Reserve edging back toward easier policy, and a global geopolitical environment that increasingly rewards those who own real resources. When you combine all of that, silver's recent breakout is not a mystery. It's a message that the system is moving into a new phase. And here is the part you really need to internalize. This phase is still early. Most people are not paying attention. They might see a headline about silver making a new high and then move on. They don't understand the structural forces behind it. They don't see the deficits, the industrial consumption, the policy shifts, the geopolitical realignments. They see noise. You see signal. That difference in perception is where opportunity lives. So, as you listen to this, don't think in terms of a single price point or a single day's move. Think in terms of trajectory. Think in terms of direction. Think in terms of where the world is heading. Toward more digital activity, more electrification, more instability, more money creation, and more demand for assets that exist outside the control of any one government. Silver sits right in that path. As we move toward the end of this video, I want to leave you with a geopolitical question that cuts through the noise and goes straight to the heart of what's coming. If the world truly shifts toward a model where power is defined by control over real assets, not just financial engineering, which countries and which people are going to be in the strongest position? Is it the ones holding the largest piles of debt and the most complex financial products? Or is it the ones holding the energy, the food, the water, the infrastructure, and the metals that make modern life possible? The honest answer is simple, but deeply uncomfortable for those who built their strategies on paper. In a world that drifts back toward reality, control over real assets becomes the ultimate form of leverage. Countries that hold strong reserves of energy, critical minerals, and precious metals will have options when others don't. Individuals who position a portion of their wealth outside of purely paper claims will have resilience that others lack. And in that environment, silver is not just a trade. It's not just a speculation. It's a small but powerful way of aligning yourself with the side of the equation that owns reality, not just promises. So when you see silver breaking into new territory, don't just ask, how high can it go? Ask, what is it trying to tell me about the system itself? Because silver doesn't move like this in a vacuum. It moves when something deeper is shifting. And that's exactly what's happening right now. If you want to keep understanding these shifts as they unfold, stay with this journey. Keep learning, keep questioning, and keep paying attention to the signals the mainstream still refuses to see. The world is changing. The monetary order is evolving, and silver is one of the clearest messengers of that change. What you do with that message, that part is in your hands.